Good morning. How are you? I am Lex. This is the Brew, and guess what day it is? It's Friday. That means it's Paulina Likos Day. So we are going to chat with her today about how to spot companies that are industry leaders within a sector. So she's going to give us a little analysis on that, I believe. And let's get ourselves rolling right away. Bam. Good morning, ladies. How are you? Paulina, how are you? Welcome back.
Hey, Paulina.
Good morning. How are you?
Good. Hi, Mal. Good to see you. Happy Friday as usual. Thank you. So I know we have some topics to cover and we have short time to do it in. So let's get right to it, right? Interesting topic, right? How to spot companies that are industry leaders within their sectors, right? So help me out because you know what? I'm like this guy with a blindfold over me. I'd stumble into the wall all the time. There's no chance I can figure this out. I need your help, Pauline, in other words.
Well, I got you, Lex. I mean, I think this is it's an important topic and it's such a simple question. How do you spot industry leaders within a sector? And I think this is important for not only long-term investors, but also for individual, everyday traders. It's important to understand the anatomy of a company and where they stand within their industry. Are they at what stage of growth are they at? Are they a mature company? Are they a newer company? Are they kind of in the middle of their growth cycle? I think these are all important questions to ask. And I identified 4 key topics that I think investors and traders can look at in order to kind of gauge where the company's leadership lies within the sector.
Okay.
So that's kind of what I wanted to lay out today.
So I don't have to have high-level mathematics, right? Tell me no.
No, definitely don't need to be a math wizard here. I think it's important to keep in mind some metrics, but the great thing about technology nowadays is that there are so many different platforms out there that kind of lay all those metrics out for you. So you just kind of have to understand what those numbers mean within a sector.
I think this is go ahead. So go ahead, Lex.
Yeah. So the ones you're going to give this is the Paulina Likos kind of blended version of a protein shake on doing this, right?
Well, there are countless things you can look at for sure. Okay. I would say these are kind of the top things that I initially look at. For example, when I'm writing an article on a company, maybe doing an earnings preview or some sort of analysis on a company, I would say these are the top things that I go to first. And then if I feel like I need to go dig a bit further, then of course I'll, expand my research onto other characteristics.
Got it. Mal, you were going to ask something? Sorry.
Yeah. So this is a really big deal. So this is your secret sauce. You're giving us the recipe, the other thing this is really important is that when someone first gets into trading, they tend to veer away probably from the technicals and start to just get their feet wet in the fundamentals. So this is a really great introduction and your secret sauce on how you find those stocks for CNBC. So this is great. I'm excited for this one.
Wonderful. Yeah. So I'll kick it off. So the first one is earnings growth. So when a company reports earnings on a quarterly basis 4 times a year, the number one thing that you hear, reporters and analysts and, anybody that's on Wall Street looking for earnings, is the company consistently making money quarter after quarter, year over year? And is there a consistent growth trajectory that the company is hitting? Even before a company reports earnings, we always look at the analyst estimates of earnings per share and revenue. And if the company meets or exceeds those 2 metrics, then the stock is expected to, maybe perform well. It could not perform well too. I mean, there are a variety of reasons why a stock moves, but generally speaking, when earnings and sales are positive, then the market responds positively to those areas. So what do I mean by earnings growth? Well, sales is represented by revenue. Is the company growing its revenue? How is it doing that? What kind of corporate strategies do they have in place in order to make sure that they're attracting customers and growing their sales? And then in addition to that, profitability metrics. That's kind of the next leg of what to look at. All right, the company is growing sales. That's wonderful, but are they making money? And that's where the profit metrics come in, like operating profit, and there's so many different profitability metrics to look at. So that's kind of the first one.
Okay, let me ask a question. I'll let you have a breath, maybe. So
while she's taking a breath, I just want to notate that you can apply this to your dating metrics.
You can apply to dating?
What has been the overall growth rate of someone's success you can apply these same
Interesting, Mal.
Yeah.
Interesting.
Just keep that in mind.
I'll keep that in mind. I'm going to remember that. So here's my question. And I don't, if you don't have an answer, I get it. So I have this debate with a good friend of mine who's in the financial space. He's like an RIA. I don't know if he's exactly an RIA, but he manages money, right? And he would never look at a company like Amazon, in the old Amazon, when it was just starting out. It really wasn't making money, didn't have a lot of profitable earnings sort of things. There was always a loss, right, in the early days of Amazon. But that stock went straight up all the time. So is that just a different type of stock for your sort of analysis? Because some stocks don't have it. They're like growth stocks and crazy potential, and they can go crazy up too, but they still might not have those metrics that you're looking at first. Or am I just really dumb and asked a dumb question? You can say that too. I'm okay. I'll cry in the corner after you say yes, but.
Well, that's a great question. I think it's important to distinguish between companies in different sectors. And for example, Amazon, which was actually one of the examples that I had for the second topic, which really flows into that nicely, is what sector is the company in? Is it in the tech sector? Is it in the consumer staples sector? All of this is really important, because in the tech sector, that is a sector where companies have to take on a lot of debt, because there's a lot of capital investment that's going on in order for the company to experience growth. So Amazon, in the early stages, they started out as, they were selling, books, right? And then they expanded into different verticals. And now they're, a mega e-commerce platform. They also have their cloud services. They went into streaming as well. So I think that there was so much enthusiasm around Amazon because of the plans for growth. And in those early stages of growth for a company, it's expected that they're not going to really be generating a profit. Even to this day, sticking with the Amazon example, Amazon doesn't pay a dividend. I don't think so. Whereas other companies that are, way more mature than Amazon, they pay dividends. They share their profits with shareholders. That's what dividends are. But Amazon doesn't do that because, they're still growing. The latest leg of growth is going to be the investments they're doing in artificial intelligence. So that actually is kind of the explanation for the second characteristic, which is plans for growth.
Okay.
So yeah, I'll stop there.
Okay. Yeah. So that's interesting. So technically that number two, the innovation part, covers my question, I think, right? So we could have a new company. I'm trying to think one off the top of my head. I can't. That is just bonkers and still hasn't really made any money, but they've got a great innovative solution or products or whatever. So that's interesting. I like that. Very good.
Well, you have to post some sort of some sort of, profit, or you have to show something for investors, because if you're not making money, then why should people be investing in your company?
Mhm.
So I think that there needs to be some sort of plan laid out with a vision of what profits are going to look like in the future, and what the timetable around that is, and so forth.
Okay, got it. Molly, you good?
Yeah, I was just going to say that, tech is really important. So even though we're talking about, let's say, Amazon and tech, probably every company must have to have a map of how they're going to navigate AI, quantum computing, and all these things that we're confronting, and what is their data stack. And, because a lot of these companies are online. And so how do you look at a company that may not be in tech that has to integrate other components of other sectors? Do you ever combine those, or do you ever really study those in isolation and compare to just, other competition out there? Or do you ever kind of zoom out and look at how they're navigating through related, connected sectors?
That's a really good question. We can go back to the Amazon example, because even though it's considered an e-commerce platform, it has so many different diversified businesses. So when you're investing in Amazon, you're not investing in a retail company. You're investing in a tech company. You're investing in a cloud company. You're investing in a streaming company. So I think that's a perfect example of a company that is, has its tentacles into so many different verticals and sectors, even though it's still considered under the umbrella of the tech sector. For the third characteristic, which is kind of more centered around one sector, and Lex, you mentioned this word innovation. It might not be the first thing that an investor kind of thinks about, but what do I mean by innovation? I mean, is the company able to take its existing structure and fit it according to what's happening in the world today? So the first company that comes to mind is a consumer staples company, Procter and Gamble. So Procter and Gamble, they sell the day-to-day things that we use, like toothbrush, razors, and Tide detergents, baby products, health and wellness products, and so forth, things that we need every day. So you would think this company is always going to be performing well, because we buy the stuff that we use on a day-to-day basis, and that is true. But Procter and Gamble didn't become a success just because of that, especially during this time where consumers are suffering from inflation. They're trying to figure out how to save money. But Procter and Gamble, they've been able to show consistent earnings growth, and that's specifically because of the innovation that they have with their products. So what are they innovating with? Well, they're updating their labels, they're updating the formulas to in their products to make it better. It's all about better marketing. So basically they're marketing experts. So the packaging might look different, and that is preventing people from trading down into cheaper options. So that innovation that Procter and Gamble is doing is allowing them to still be a leader in its industry and to keep taking market share in the consumer staples business. So innovation is the third one.
Okay, so who someone like Procter and Gamble, who's their main competitor? Do you know off the top of your head who would that be?
The main competitor would be, I would say, the other big retailers.
Like, is Target? Not really, right? So
actually, maybe the retailers wouldn't be, because the Procter and Gamble's products are in retailers like Target and Walmart. That's a good question.
I'm trying to think of who a competitor would be. You know what this is a job for? This is a job for the Bard. Let's just keep rolling. I'll take care of this for us.
Well, I do have a question. So this is really neat that you bring up innovation, because this is where you can kind of turn off the TV. And when we talk about, do they have have they had a history of innovation? Do they have great products out there? And do they invest a lot in R&D? And what do they have in the pipeline? You can go, let's go back to, toys. So you can go to Best Buy and you can walk in a store, sample their products, but more importantly, talk to the people on the floor, because they can tell you what's successful and what's not, and what's being purchased and what is being left in the dust. And so there's a lot when we're talking about research and how do we find stocks that play out, you can actually go and try it, and then you can really get that information before it ever hits the street in some of this news. So what do you think about that? Is that reliable, not reliable, useful, not useful?
100% reliable. I mean, I read analyst notes all the time where they go on the ground into these retail stores and they talk to, the employees and the managers there to gauge, how things are going with the business, what type of trends they're seeing, how are consumers responding to their products. So that is, if people have time and they have the will to do something like that, that's definitely going to be a huge part of your research and understanding, the strength of the overall company's products. So I think you're spot on with that.
I always imagine that, I would own a $10 fractional share and kick open the front door of a headquarters. Like, I'm sorry, do you have an appointment? I go, no, I own the company. So I'm important here.
Yeah.
Someone needs to talk to me. No.
That would be good.
That's a neat trick, guys. So Procter & Gamble has 1,000 things you can try for less than $10, and you can test stuff out. Yeah.
So I did a little search on competitors. So what came up was Unilever. Do we know that one?
Yeah.
Johnson & Johnson, Colgate, Palmolive, Kimberly-Clark, those kind of companies. They sound legit, I think, in terms of good ideas, good competitors, right?
Yeah, definitely. Those are big competitors for sure.
Okay. Got it.
And, I've always got to sprinkle in a little bit of...
Oh, here we go. Conspiracy theory. Hold on, let's put my seatbelt on. Oh my God. I'm buckling up now.
Okay.
Go ahead.
So when we talk about competition, it's really nice to go on Yahoo and throw in a ticker, and across the top, there's something all the way to the right called holders. Sometimes you have to click the 3 dots to get to that one. And you can see who owns that company. So you take Coke and Pepsi, which are obvious competitors, but they are apparently owned by the same people. So speak to that. How do you, if a basket of competitors are owned by the same company and one falls, can you make a move? Do you have an edge on making a trade ahead of the curve on the other stocks in that basket?
I would say that in that case, it's important to be diversified. You don't want to rely on, one company's performance, even within a sector. We're talking about industry leaders today. It's great to have a company that is a leader or, on track of becoming a leader. But, at the same time, you want to make sure that you also have space for other companies that are at other stages of growth, that have other strengths that other particular companies don't have. So that's where I think diversification comes into play.
And so what you're saying, that's a really great point. What you're saying is that if, let's say, Vanguard, State Street, BlackRock own a company, you might want to just venture out into something that they don't own, so that if they have some problems in a product category, that you are balanced in your investments.
Exactly.
Is that correct? Okay.
Good. Okay. Awesome. Are we on number 4?
Yes, I'll run through this one quickly, and it's a simple one, and it's understanding if a company is financially sound. Are they healthy from a financial standpoint? All companies, of course, have some sort of debt, but the key here is, are they able to balance it well with their profits that they're making? So depending on what industry you're in, that obviously can influence the level of debt that a company takes on. We talked about companies in the tech sector having, to take on a colossal amount of debt, especially in the early stages where they're growing. versus, another company that might be investing in research and development for innovation, like a Procter and Gamble, who, they've already done this years on year's end, and they know how to balance growth with profits. So if they have a certain level of debt, I wouldn't initially think that it's a concern. But as long as they can, maintain that level of debt and reduce it over time, I think that it would be in really good shape.
Okay, that's good.
And this sounds more complicated, so let's break it down to the everyday. So let's say someone is renting a house or buying a house. So when you go to make those transactions, the bank, if you're trying to buy a house and you're trying to get a mortgage, will look at your debt burden. And what the one financial statement that always gets ignored in 10Ks is the cash flow statement. So they will not lend to you if they don't believe that you can, if you take on new debt, that you, with the pre-existing debt that you have, that you can make that payment every month. And I think companies fall into that same kind of analogy. And so that not to get scared off, this is the same thing that might happen with, renting if you're just starting out. And I think that's a really good point.
Yeah.
So do you analyze cash flow statements? Do you go in deep to the 10Ks, or how deep do you go? Do you just find I have a great question. How often does cash flow get spoken about on the street relating to corporations?
Oh, cash flow is such an important metric that we all look at. I dive into the 10K all the time to understand the financial health of a company. Cash flow, we want to see if it's consistent, if it has changed from quarter to quarter. If there has been changes, you keep asking further questions. Why has that changed? Is it something that's specific to the company? Is it something that's more macro specific? From there, just by looking at the statement, you can ask yourself so many different questions, and it will take you, it'll tell you the story really around what's happening with the financial health of a company.
Yeah,
I think that's great. And with high inflation, when you have pre-existing debt, when more money goes into circulation, that debt essentially that payment in what it feels like shrinks. So inflation, is that good for pre-existing debt on cash flow statements?
So inflation is always going to be present, unfortunately. We're obviously experiencing very high levels of inflation. I think for companies, what's even more challenging is interest rates, especially for companies that have a lot of debt, because higher interest rates means a higher cost of capital. Right. So this is why, you see the markets react negatively when the Federal Reserve raises interest rates, and how specifically the tech sector, you see tech stocks kind of respond more negatively because they have such a high level of debt. And with that debt burden and higher interest rates, that's going to be more challenging versus a retail company, for example. They have very, much lower levels of debt. So that cost is not going to be much of a concern for investors. So it really depends, where you're looking at.
Yeah. I know you have to go, Paulina. So one quick question, I hope. Is there a debt to equity ratio that's a rule of thumb that you look at as a sign of health or not health, for that matter?
Great question, Lex, and maybe even by sector. So maybe tech has higher, debt than, let's say, this industry.
Yeah, I don't know if there's a rule of thumb one. Obviously it's really gigantic number. You might not love that, but do you have a little rule of thumb? Is it 1-to-1 necessarily?
It depends on the sector.
Okay.
So yeah, debt to equity ratios are really important to understand the financial, the debt burden that a company has. But it really depends on what sector you're looking at. And there are a number of factors at play. So it is on a case-by-case basis, but it's great to look at all these different metrics, because that's really going to help you understand where the company is at.
Okay. And awesome. I know she's got to leave, so we let's let her cruise. And Molly,
this question's All right, this question will be for you, Lex. Thank you,
Okay,
Paulina.
good. Paulina, thank you so much. Have a great weekend, and enjoy the rest of this Friday.
Thanks. All right. Talk to you guys
Okay.
later.
Bye, Paulina.
All right,
Molly,
Lex.
we're back.
All right. So, how often do you think
She's
these guys
great,
get it
by the
right?
way, isn't she?
She's so good.
Oh,
I
look at
feel
my
like
shirt.
she cleans us up a bit. She puts a tie on us.
She
I like
does.
that.
Do you see
She's
my shirt?
organized. Yes, I was going to ask you about that.
It says "Let's eat, kids," and then
It is Friday.
and then it says "Let's eat, kids," and then underneath it says "Punctuation saves lives." It's a grizzly bear, right?
Sorry, not my glasses. That's so good. That's really good.
Yes, so that's fascinating, and I like the metrics. I need to know more about, maybe we'll get her on another show and ask her more about understanding the metrics. So I know what the metric is. Now I need to understand when I see one, what the hell I do with it. Right.
This is a great point. You brought the best question out. You have the MVP for best question because Rob Hawking, who was just on, and in the future we might want to ask if vol by sector. That might be a great question.
Right. Yeah. That's a good one for him. All right. We should probably run, Mal, shouldn't we?
Okay.
All right. So you have
Happy
a good weekend as well. And we will see you next time on The Brew.
All right.
Bye, Mal.
Bye.